Good morning, good afternoon, good evening, depending on where you are on the planet, and welcome to the Thursday, the 12th of May, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go through our usual regular run through here today. Data, what we've had, what we've got coming up. Take a look at the markets with regard to the macroeconomic fundamental events that are impacting right here, right now. Articles from the major news wires. And then we'll take a look at some charts. Let's kick off with the calendar. Well, yesterday obviously CPI was critical. Markets, stock indices were, with hope pushing higher. Markets have been trying to push higher more recently on the stock side, trying to move back towards a risk-on theme. However, disastrous really CPI data in here. You can see a sea of green in here with the data. This is yesterday's data. So, the core CPI came in, expectations 0.4, came in at 0.6 month on month. The headline 8.1 on the year expected came in at 8.3, running hotter than the market would have expected, and stocks immediately sold off. They did try to bounce and then went back lower again in here. Dollar has re-strengthened. Bonds continue to actually move higher in price, lower in yield, interestingly. Interesting as well, the dot plot chart, we looked at this yesterday, was signaling like only a 90% chance for 50 basis point. Now we're at 95% of a 50, and so less of a chance of a bigger hike. Now you would have thought higher inflation would mean a bigger hike, but the market in here actually pricing in similarly here on the July meeting, and the market actually now pricing in less of a chance after that data, which is a bit strange. The bond market kind of seems to be, but the bond market is obviously rallying as a safe haven now. Where do you go? Where's your protection? Well, it's nowhere at the moment. Everything's selling off. The only thing that people are buying here are the dollars at the moment, and safe haven currencies to an extent. So dollar yen hasn't really moved. So we're in a real risk off scenario. Stocks are selling off. Dollar yen didn't move higher in here, and that's because now we're at a point of the yen's worth owning, the dollar's worth owning. Euro didn't really move too much either against the dollar. Okay, so those kind of the G3 currencies, euro, dollar, and yen, all holding in yesterday, and what got hit were the risk currencies. The Australian dollar, the Canadian dollar, the New Zealand dollar were sold off more aggressively again. So that tells you this is a risk move. Concerns about a hard landing, given the has concerns about inflationary pressures creating a hard landing, pushing stocks lower, risk currencies lower in here, and bonds actually going higher. So if we take a look at some of the articles in here of the major news wires, stocks tumble. Actually, before we go, let me go back to the calendar, and we'll just jump to today's calendar. Now it's a fairly light calendar for today. We've had some notable GDP numbers and industrial production numbers out of the UK, not really impacting the markets we're looking at too much, but nevertheless, you see a lot of red in here. So this is production data, GDP data in here, missing expectations again, reflecting concerns of a potential slowdown in the economy. Okay, that's certainly a negative. We do have PPI in just under 1 hour today. Not really going to be a big mover in markets unless it's massively out of line in here. So, but we'll watch out for it anyway. Let's just under an hour's time PPI data, and then we've got daily speaking later today at 3 o'clock Eastern. So watching out for that as well. Maybe starting to get a little bit of a reaction to the CPI data that we saw from yesterday. So looking at those headlines though in here, so stocks tumble amid inflation worries, dollar gains, treasuries rally with 10-year rate shedding 9 basis points. US CPI seen pushing Fed into more hawkish tightening path. Well, it's not really reflected though in the bond market and what we're seeing though. So potentially not. The bond market didn't react that way. Bonds, haven currencies rally as growth risk haunts markets. So again, in this, it's more concerns of the hard landing there, concerns of recessionary pressures going forward in here, giving a bid to bonds up, safe haven currencies up, dollar up, euro up, yen up. Okay, they're not actually rallying in there against the dollar, the euro, and the yen, but they're up against the Australian dollar, the New Zealand dollar, and they're up against the Canadian dollar. Okay, so those kind of currencies, the reserve currencies, doing better in here more recently. Oil resumes declines, market grapples tumultuous trading. So what part of the reason now oil going lower is because of concerns about growth. Lower growth is now negative for oil, less demand for oil. And if we go take a look at the European markets, how they reacted, well, pretty bad. We got a late sell-off yesterday as well. So US markets were down anyway through the session, but then they closed the session very weak. So European markets were already on the back foot, and US futures were down further. So we're down about 1.5 to 2% on the major European equity indices today. And if we go and take a look at the US in here, what we'll see is we had this big sell-off obviously yesterday, 3% on NASDAQ, 1% on Dow, and we're down another nearly 0.75% on the NASDAQ this morning, about between 0.25% for the S&P and Dow. So nudging still lower in here this morning. And similar headlines coming through from Reuters: stocks in tailspin, dollar soars as hard landing fears grow. Still too hot there. Obviously talking about CPI numbers, the US inflation data still higher than anticipated in here, and a very negative outcome. Nasdaq fell percent. Look at its worst 5-day drop since March 2020. That was on the breaking of the pandemic into Europe. Oil sets more than 10% on fears recession may hit demand. We've already talked about that already in here. And there's going to be a fairly quick webinar in here, guys. Apologies in here today. Yeah, I mean, there's really not too much to say. It's all about the CPI data, all about the fears, markets acting in kind of fear mode in here at the moment, and looking very, very, very risk off. So bond markets continuing to rally, but not helping out the growth sectors it did the prior few days in here. This bond rally is all now due to concerns about a hard landing, and so we're looking for a safe haven. So bonds rallying on the back of that. And if we take a look at first of all the S&P 500s, bear with me a second, guys. So take a look at the S&P 500 in here now. Looking pretty bad in here. So we're down through yesterday's lows already. 1, 2, 3, 4, 5, 6 straight lower in here. We have had a rebound off the lows. Now I'm not going to be looking to buy into that one right here, right now. So here's the 15-minute chart. Here's the little rebound we're seeing in here over the last hour or so, but nevertheless, it all still looks fairly negative. This is going to have to see. I'm going to need this all the way back up here somewhere, 39.54. Up at like the overnight highs in here to even start to get even slightly positive on this in here. So at the moment, no, this is just an opportunity to sell into. And it's the same with the NASDAQ, so NASDAQ is off the lows, but it made another new low in here this morning. Yes, we're off the daily lows, but if we go into the 15-minute chart for the NASDAQ, this is just, a bit of a dead cat bounce. Again, overnight highs up here towards 12,070. It's got to be back up here before you even want to start thinking about buying this thing. Anywhere below that we're looking for this as a sell opportunity to go notably lower. We're not even down 1% on the day. It's been shedding 3% easily in here. Let me jump to the commodity markets. So oil in here surging back high yesterday, dipping a rebound in here this morning. It's completely been caught in this range, right? It's been a hard trade caught in this range. You'd have to say, after yesterday's price action and on top of yesterday's price action, the dip and the bounce in here this morning, you'd have to say you have to approach this from the long side. So there's yesterday's rebound. There's the dip. There's the rebound in here so far. You've taken out, you can imagine here, counter trend line going down through here. Got this kind of counter trend line. Why is that not drawing? So you got this counter trend line that comes down through, say, here. Yeah, we're above that already. So that's a positive. You've got higher highs and higher lows now on the 15-minute chart. I'd be playing this one from the long side, breaking above the current peak, maybe. You've just taken out that peak there. So we're just above that peak there. So, yeah, I think playing this one from the long side on oil. And if we go take a look at gold. So gold in here has been sold off beginning of the week, rebounded yesterday, kind of indecisive this morning. So if I go in and look at the 15-minute chart, what do we think? Well, it's kind of a base, but not quite a base. You've got potential double bottom in here with the market breaking up through here. So looking like a base, sold off. I probably just tentatively want to buy this, but probably wouldn't now do that until we break above this kind of, again, this kind of counter trend line in here. So until it gets back above 1850, 1852, 53, I wouldn't want to be going long till there. So waiting for that as a trigger. If it takes out the overnight low there, which is 1843.1, then I'm short. So short through 1843.1, long up through like 18, say 53. Okay. And that's been a bit of a whistle-top stop tour today, guys, but there's not really much to say in here. You know, it's all about CPI. This week it's always been about CPI. The market, you know, destroyed any kind of recovery efforts. It's all looking very, very, very risk off in here at the moment. And so I think you have to play it from that side until we get a real kind of signal otherwise. And at the moment, we're just not getting that. I'm going to wish you all a great trading day. Please do stay safe, take care, and I'll be back with you with another bull versus bear webinar on Friday.